Let's kick off with that oil price. We saw a little bit of pressure a little earlier. Now it's pretty much on that flat line, but still around $115, $116 a barrel. Various news coming through that we're still seeing strong crude inventories in the US, and perhaps the Libya situation is starting to abate somewhat. So we're starting to see oil flowing through from that region.
No, definitely. We have seen that oil price simply trading in a range of around $115 a barrel for the most part of March. And largely, as you're saying, we have seen that slight pullback today on news that we might see the tensions in Libya might recede somewhat. However, we have seen, as well, we have seen supply coming out of the US just simply increasing, continuing to increase and dampening that WTI benchmark slightly. However, we remain optimistic on the oil price. Our view is $400 a barrel average for this year. So slightly, so once we see the tensions in Libya subside completely, we expect to see the oil price to pull back to around
Josina, I mean, it's so fascinating. When you look at what Saudi Arabia has been doing, and it has, in fact, increased its output to around 9 million barrels per day. It's 1 million barrels per day more than its OPEC target. Analysts say that it should put a strain on its spare capacity. But then again, why are we still seeing a lot of speculators coming to the fore in the market, given the fact that that supply gap has, of course, been filled?
No, I think the problem now is simply what the risk of problems in Libya spilling over into other oil-producing nations. So the supply with OPEC's spare capacity also falling slightly with Saudi Arabia increasing their supply. So definitely the risks are to the upside on the oil price, given that supplies are now global supplies have there's not much spare capacity left. So definitely the risks are to the upside, and we're monitoring, but it's not easy to assign a probability to what the next country might be. So, but definitely upside risks remain.
I mean, you mentioned the US crude. I mean, the WTI relative to Brent crude, we're still seeing a sort of a gap between around $10 to $12 or so. Do you think that is going to widen further?
I think what we're actually going into the slowdown in seasonal with the US coming out of their winter. So seasonally demand will come down slowly in the US and for the month of April. However, with the next big theme then for the oil market will be the US driving season, which will start in May. So that definitely to increase demand for oil coming out of the US. So that might put some upward pressure on the WTI price during the May to September. That is typically the US driving season period.
Let's delve into copper. We've also seen a little bit of pressure coming through on the copper price, just keeping in mind that in February the 15th, it hit $10,190 a ton. But then again, the metal used in power and construction was down around 7% since it hit that record. So we are starting to see a bit of demand constraints, if we could call it that. And then you've got the Japanese situation playing out as well. In terms of copper, you're still bullish that things could get better?
Yes, on the whole, one has to admit that at these levels, copper is still at fairly high levels. Our outlook remains positive. However, we have seen a slight pullback. I think it's just some consolidation coming through in the copper market. With supplies still remaining at elevated levels. We particularly pointing to LME stockpiles. That has just been increasing at almost 20% up from the start of this year, definitely signaling to some slowing demand. We're also coming out of that slowing seasonal demand, normally March being a slow demand season in the copper market. So going forward, we could see some upward pressure.
And I mean, perhaps casting a lot of doubts as to the rhetoric about there could be a deficit this year when it comes to copper.
No, definitely. The view out there is for the copper market to remain in deficit for this year, which will simply continue to support that upward trend in the copper market for the remainder of this year. And what's interesting now is the situation out of Japan, that reconstruction that might take place later in the year for the reconstruction build of the economy for the damaged areas due to the earthquake will definitely boost demand for copper.
And of course,
going forward.
Gold struggling a bit as well. Some hawkish comments out of Jean-Claude Trichet, and of course some of the US central bankers as well. So imminent interest rate hike, it seems.
Yes, we have seen that gold price just trading slightly lower today. Support at around the $1,410 an ounce level. As you mentioned, concerns that the US economy is advancing at a faster pace than initially thought. So that definitely putting some downward pressure on demand for gold as a safe haven asset. However, inflationary concerns should remain, and we expect that to simply drive demand for gold as an inflation hedge for the remainder of this year.